NVIDIA just added $11 billion in new data center revenue in a single quarter. I mean, clearly the AI spending boom is definitely not peaking yet. You are listening to Earnings Unscripted, where we unpack what really happened in today's earnings. It is February 25th, 2026, and today we are looking at NVIDIA, ticker NVDA, and their Q4 results. So, look, it was another absolutely massive quarter. Record spend, crazy margins, but the stock reaction was just, well, a little odd. What was your first read, Mira?
It is genuinely hard to complain about the raw execution here. They brought in $68.1 billion in total revenue. That is up 20% just from last quarter. And the bottom line, their non-GAAP EPS was $1.62, jumping 25% sequentially.
Just a quick reminder for everyone listening, everything we discuss here is purely our personal opinion, not financial advice. But hold on, you said it is hard to complain. Their gross margins improved too, right? Up to 75.2%?
Exactly, which is wild considering how much physical hardware they're pumping out right now.
So why the giant shrug from the market? The stock spiked to almost 207 right after the bell, and then as the earnings call went on, it completely erased all of those gains. It closed after hours basically flat.
Right. Because expectations are essentially gravitational at this point. Everyone knows the core chips are selling out. But what people miss is that NVIDIA is not just a hardware vendor anymore. You need a massive, highly complex nervous system to tie tens of thousands of AI GPUs together.
The networking side.
Exactly. Their networking revenue alone was $11 billion this quarter, up 34%. But the market is looking past all that today. They warned about gaming supply constraints, and more importantly, they're gearing up for the Vera Rubin chip transition later this year. Investors always get skittish around transitions.
Yeah, that makes sense. It's also fascinating to watch how the actual end product is evolving. Jensen Huang said something on the call that really stuck with me. He claimed the ChatGPT moment of Agentic AI is officially here.
Right. So we're moving from chatbots that just generate text to systems that actually execute workflows.
Yeah, like he used their own software engineers as an example. Instead of typing out logic paths all day, NVIDIA coders are acting as supervisors now. They run 2 or 3 different AI agents simultaneously. These things just run for hours, churning out thousands of lines of code to optimize their stacks in the background. It feels less like coding and more like managing a digital workforce.
And managing that workforce requires compute. Jensen made it very clear every single token those agents generate is compute, and compute is NVIDIA's revenue. The longer those agents run, the more hardware you burn through.
Wow. Okay. I mean, it's a brilliant ecosystem play, but there's a lot more hiding under the surface here, especially a huge change they announced regarding stock-based compensation. All right, let's get into the details.
So the accounting change, to me, this is actually the most fascinating part of the whole report. For years, tech companies have treated stock-based compensation like, monopoly money. They strip it out to make non-GAAP profits look fantastic.
Wait, hold on. Are they just completely reversing that?
Exactly. Starting Q1 of fiscal 27, NVIDIA is putting stock-based comp right back into their non-GAAP operating expenses. They are basically forcing the rest of big tech to look in the mirror. The CFO actually said on the call, quote, "Starting this quarter, we will be including stock-based compensation expense in our non-GAAP results, a foundational component of our compensation program."
A foundational component. I love that phrasing. Like, yes, we actually pay our humans with real money. But how big of a hit is that to the optical numbers?
It is massive. Their non-GAAP OPEX guide for next quarter is $7.5 billion, and $1.9 billion of that is just this comp being added back. It instantly resets the baseline for profitability. You have to respect it. They make so much cash, they do not need to play pro-forma games anymore.
Okay, speaking of having so much cash, there was another number that really stood out to me. Their free cash flow shot up 58%. It hit nearly $35 billion for the quarter.
But, and this is the weird part, they only bought back $3.8 billion in stock. That is, well, it's a huge drop from the $12.6 billion they spent last quarter. So what are they hoarding for?
Right. So their total cash and marketable securities is sitting at $62.6 billion right now. When you see buybacks slow down like that while the cash pile explodes, it usually means management thinks the stock is perfectly priced. Or they are loading up the cannon for something else.
You mean like acquisitions? Because they also disclosed that $10 billion stake in Anthropic, right?
Bingo. $10 billion into the makers of the Claude model. They are expanding from a chip maker to a hyper investor. They are effectively locking Anthropic into the Blackwell and Rubin ecosystems. You know, you secure future demand by literally owning a massive piece of the companies that need your compute.
Wow. So they're basically acting like a sovereign wealth fund for AI at this point.
That is exactly it. It's a total ecosystem play, which also explains why Jensen is going out of his way to trash the competition's architecture. Did you catch his comment about the dielet tax?
Oh, the dielet tax. Yes, I saw that. What exactly is the tax there? It sounds very dramatic.
It is. So competitors are heavily relying on chiplets or dielets, where they basically stitch smaller processors together. But Jensen called out that jumping between those pieces adds severe latency and power penalties. His exact words were, the dielet tax shows up in the architecture effectiveness of the competitors. He's basically reminding everyone why NVIDIA sticks to building these giant monolithic chips.
So he's weaponizing physics against his rivals. You want our margins, you have to build the whole giant chip without cutting corners. I mean, that's just a brutal flex.
It is, because in a data center, power is everything. If you pay the tax and efficiency, your total cost of ownership completely falls apart.
This whole picture is just dizzying. We're talking about tens of billions in cash, unilaterally shifting global accounting standards and rewriting how data centers process math. So stepping back for a second, where does this actually leave them heading into next quarter?
Well, looking at their actual guidance, they are forecasting roughly $78 billion for Q1, which is just staggering. But the most fascinating detail is what is not in there. They are projecting exactly $0 in data center compute revenue from China.
Hold on, 0? I mean, I know trade restrictions are strict, but zeroing out that entire market, that is just a wild level of confidence.
Right, and it just proves how absurd the demand is everywhere else. Because for them, CapEx is not a cost anymore. Jensen actually said on the call, quote, "In this new world of AI, compute is revenues. Without compute, there is no way to generate tokens." So these big cloud providers, they're not buying hardware, they are buying factories that print tokens.
Wow. So as long as the AI models keep getting hungrier, the buyers basically have no choice. It is just a total arms race. But what about the actual product cycle? Because Vera Rubin samples are shipping to customers this week. Does that create a transition gap where buyers just sit on their hands waiting?
That's the main unknown right now. It looks like they're betting the next quarter on absolute execution. You already have tight gaming supply acting as a headwind, plus managing the handoff to the Rubin architecture in the second half of the year. If that transition if the ramp is at all choppy, growth could compress pretty fast.
Can I jump in? Because if growth compresses right when Wall Street expects flawless momentum, that completely explains the stock shrugging today. It's not about whether NVIDIA is winning the war. We know they are. It's just whether they can hold this completely impossible altitude.
Exactly. Gravity always collects a toll eventually, even if you have the best GPUs on the planet. Or, in orbit, considering they actually put Hopper chips in space now.
Oh, right. Hopper in space. Honestly, Miro, if Jensen actually figures out how to monetize the literal vacuum of space, I promise to never question their valuation again. I think that is a pretty good place to land for today.
Yeah, we will definitely be tracking those space margins. Anyway, if you want these earnings drops to just show up, go ahead and follow the show. And as a quick aside, we do build this podcast with AI, which is exactly how we parse through these giant SEC filings so fast. Drop your feedback or ticker requests over to earningsunscripted at datamadness.ca or just grab the X link in the show notes. Thanks for hanging out, and we will catch you next time.
Take care.